Most small businesses don't fail because they run out of customers. They fail because they lose control of their numbers. So what happens when the software trusted to manage those numbers is the wrong one? Every year, startups and growing businesses face the same decision: Xero or QuickBooks Online. Both promise simple bookkeeping, clear reports, and less stress. Both cost far less than a full ERP system. Both connect with thousands of add-on apps that claim to run the business more efficiently. But these two platforms are built with very different ideas of how small businesses actually work. Stay until the end, because the real difference between Xero and QuickBooks Online doesn't show up on the pricing page. It shows up months later, when growth, cash flow, and mistakes collide. And once that moment arrives, switching becomes harder than choosing correctly the first time. The first question that matters is simple. Why are these two even compared in the first place? Neither Xero nor QuickBooks Online is an ERP system. They do not manage every process across an entire organization. Instead, they sit at the center of a business's financial life. Invoicing, expenses, payroll connections, bank feeds, reports. When more power is needed, both rely on third-party add-on apps to fill the gaps. That is exactly why small businesses choose them. They are affordable, they are cloud-based, they scale gradually, and, they avoid the cost and complexity of enterprise software. What often gets missed is how much responsibility this central position carries. When accounting software sits in the middle of everything, it quietly dictates how information flows. It decides how quickly problems surface, how easy it is to catch mistakes, and how confidently decisions are made. The software does not just record activity, it shapes behavior. But here's the twist. Xero is cloud-only. QuickBooks exists in two worlds, desktop and online, and that matters. QuickBooks Desktop still runs as on-premises software, sometimes with remote hosting added later. But, businesses searching for modern cloud accounting almost always compare Xero with QuickBooks Online instead. That is the real choice happening today. And once the comparison narrows to cloud versus cloud, the differences start to sharpen. So what exactly is Xero? Xero is cloud accounting software built by a New Zealand company, Xero Limited. It was designed later than QuickBooks Online, and honestly, that timing shows everywhere. The interface feels modern. The dashboards are customizable. Reports update in real time. Most users learn the basics quickly. Xero serves more than 2 million users worldwide. It dominates markets like New Zealand, Australia, and the United Kingdom. It continues to grow in the United States as well, especially among startups and tech-forward businesses. Financially, Xero is not small. It reported over $877 million in annual recurring revenue and continues to grow year over year. This is not an experimental platform. It is established, global, and aggressively expanding. What that global footprint means in practice is flexibility. Xero was built for businesses operating across borders, currencies, and time zones. Even smaller companies benefit from that philosophy, because the system assumes growth rather than reacting to it later. But market presence alone does not make software right for every business. So what about QuickBooks Online? QuickBooks Online is owned by Intuit, a United States-based company that also produces TurboTax. It is one of the most widely used accounting platforms in the world. Accountants, bookkeepers, and tax professionals often already know it before a business even hires them. This familiarity creates a kind of gravity. Businesses do not have to explain their setup from scratch. Advisors step in and immediately know where to look. That reduces friction, especially during tax season or audits. QuickBooks Online delivers real-time dashboards, invoicing, expense tracking, payroll add-ons, and reporting. But its real strength is scale. The advanced plan pushes QuickBooks Online into mid-market territory, supporting companies with up to 100 employees. Intuit's financial growth tells the story. QuickBooks Online revenue has grown faster than QuickBooks Desktop. Billions in revenue, double-digit growth, a strong push toward higher-tier plans. Which one feels better to use every single day? Xero was designed with simplicity in mind. The layout is clean. The visuals feel calm. Tasks are broken into small steps. For many users, the learning curve is short. The system feels less intimidating, especially for founders handling finances themselves. That ease really matters in the early stages. When time is limited and your attention is split, software that reduces your mental load often gets used more consistently. And, consistency is what keeps your numbers accurate. QuickBooks Online feels a bit more traditional. The dashboard is dense, but, it's definitely informative. There is more data visible at once, and more options are surfaced early on. For users who are familiar with accounting terms, this feels pretty powerful. For others, though, it can feel a bit heavy. The payoff here is clear. Xero feels modern and intuitive, while QuickBooks Online feels robust and familiar. Neither is objectively easier. Honestly, they just serve different mental styles. But usability alone does not keep a business alive. So what happens when work moves to the phone? This is where Xero pulls ahead. Xero offers multiple mobile apps, not just one. Xero Accounting, Xero Expenses, Xero Projects, Xero Me. Each app serves a specific role. Employees submit timesheets, managers approve expenses, owners review cash flow, all from mobile devices. This modular approach mirrors how teams actually work. Not everyone needs access to everything. By separating functions, Xero reduces friction and accidental errors while encouraging adoption across the team. QuickBooks Online has mobile apps too, but they are more limited. Many features are still better handled on desktop. For teams working remotely or on the move, this gap becomes noticeable. Here's the resolution. Xero leads on mobile flexibility. QuickBooks Online still thinks primarily in desktop terms, but mobility is only part of the equation. Now comes the question businesses care about most. How much does this really cost? Xero pricing is simple. There are 3 plans: early, growing, and established. There are no per-user fees, which is honestly great news. You get unlimited users, but just keep in mind, transaction limits apply on the lower tiers. Payroll is optional, and it's usually handled through Gusto at an additional cost. QuickBooks Online offers QuickBooks payments. Credit cards, debit cards, Apple Pay, PayPal, ACH, everything flows through Intuit's merchant services. The payoff is subtle. Xero offers freedom, while QuickBooks offers convenience. What about automation? Both platforms use AI and machine learning. Xero includes automation tools like HubDoc across all plans. Documents are captured, data is extracted, and transactions are matched. QuickBooks Online emphasizes AI more heavily in higher tiers, especially advanced. Cash flow planning, workflow automation, and smart categorization are all part of the package. Both can integrate with third-party AP automation software for even more power. So here's the resolution. Automation exists in both. The depth really depends on your plan level and any add-ons you choose. So which one wins? You know, that question is the trap. QuickBooks Online is more widely used in the United States. It integrates easily with accountants. It offers backups, restoration, and deeper reporting. It scales upward more aggressively. Xero is cleaner, more modern, more mobile-friendly, and more flexible for teams. It grows globally with strong adoption outside the US. Neither is better in isolation. So we can't help but ask, which problem does the business want to avoid? If the biggest fear is losing control as the business grows, QuickBooks Online leans into structure, clear guardrails, and deeper systems built to handle complexity. If the concern is ending up buried under clutter and rigid workflows, Xero moves in the opposite direction, offering a lighter experience built around simplicity, mobility, and flexibility. The danger in choosing the wrong platform rarely shows up right away. It arrives quietly over time, through unexpected cash flow gaps, confusing reports, growing support issues, and the hidden cost of switching systems later. By the time the frustration becomes obvious, the business is already deeply tied to the software. Accounting tools do more than record what a business does. They influence how it operates, how decisions are made, and how clearly the future can be seen. That is why the choice matters more than it first appears, because numbers have a long memory, even when people forget how those numbers came to be. If this cleared up even a small part of a decision that's been sitting heavy in the back of the mind, don't ignore that. Hit like, so this reaches other business owners stuck in the same loop, subscribe for breakdowns that save time and mistakes, and send this to someone who's about to choose their accounting software without realizing how much it will shape their next few years.